Good morning, sir.
This is episode 93 of the Beef and Bitcoin podcast with your hosts, Brett and CH. Today's topics, $7 trillion. Fed balance sheet has just broken out. I mean, I don't really know how else to describe it, but we went from basically 4 trillion to 7 trillion in a matter of weeks. And I know we both had talked about this for a long time, saying how it could never happen and just go straight up, and it actually did. So I thought that was just such an interesting thing to kind of riff on as we go through these topics today. These topics include, this was kind of put out about a week or so ago, but I think it's important to touch on now, especially since the halving is now came and went, that CashApp purchases and Grayscale GBTC purchases have just really gone through the roof in the last couple of weeks, and specifically the first quarter and second quarter of this year. A lot of news on that, so we'll definitely get into some of the economics around that and what it means that there's just so many more purchases going into those into the marketplace, and we have that halving supply is now cut in half, right? So there's less Bitcoin being sold onto the market. So we'll get into that. JP Morgan also announced that they're going to start serving Bitcoin companies and crypto companies and offer them banking services. It's been a long time coming, man, 11 years. And finally, Jamie Dimon said Bitcoin was a fraud, and now he realizes that he's trying to make a shitload of money by offering banking services because there's actual demand for Bitcoin and this space in general. So it's funny to see the script finally flip on them. And, last but not least, Goldman Sachs had put out an invitation to some of its clients with the title of The Implications of Current Policies for Inflation, Gold, and Bitcoin. So it looks like maybe some of their clients are saying, what the fuck's going on with Bitcoin here? Why don't you give me some information about it? So I can see that narrative starting to play out, and it's amazing to see all three of these topics kind of wrap up together and just show where this market is headed. But yeah, we just recorded Bitcoin Pizza Day a couple days ago. That one just dropped. But how you been, man?
Living life, surviving the coronavirus pandemic. I'm just joking at this point. It's pretty interesting here. Again, I think we always talk about everything kind of relates back to fiat currency here. And again, like, what a wild time we have. I don't know if quotation pandemic is now, because there's not as many. I mean, don't get me wrong, people have died from this. It's a terrible incident, but there's not multi-millions dead, and there's no apocalypse now. So, but what happened out of this was a huge emergency stimulus from every country, and rates were lowered across the board. I mean, every central bank has just printed unlimited amounts of money, and I think is Germany's High Court or whatever, their Supreme Court or whatever it is, still reviewing the legality behind the QE purchases from the ECB?
Yeah, I believe that is still being reviewed, but it looks like they could. I don't want to use the word unconstitutional because I'm not sure that it fits that, but they could rule that no more QE. It's against the law that they cannot continue printing money. There is a cap to how much that they can print, and that's possibly very detrimental to them because just as you said, economies around the globe, mainly central banks, are doing whatever they can do to increase the money supply in order to fight the invisible threat, right? Any excuse you can use to make the money printer go burr at this point. And I heard an interesting comment that was just like, every fiat currency is exactly the same. It's just the speed of the burr, right? And Canute, I forget his last name. He wrote a couple of Bitcoin books, really great guy to check out some of his podcast interviews. But he's right. I mean, all fiat currencies are exactly the same. It is just the confidence game behind each one that makes one better than the other. And the amount of money printer go burr for each one kind of determines how quickly people lose confidence in it. And it's amazing to see that the US dollar is just the king of the fiat shit coins, and the rest of the fiat currencies across the globe are just getting weaker and weaker compared to the dollar. And, I know we've talked about this so many times, and we'll definitely get into it a bit more today, but it is amazing to see the monies really are competing against each other. And I think now that is becoming glaringly obvious to any market speculator who thinks in kind of like in a macro point of view. You have gold bugs who are looking at it, who maybe didn't think monies were competing as much. You have your traditional investors. You have Paul Tudor Jones writing that huge kind of report on the great monetary inflation. Even normies and retail people are starting to think about inflation and talk about gold and Bitcoin and their portfolios and just things that you never would have expected. And people are now waking up to the fact that some monies really are better than others, and they're starting to compete with each other. And it's kind of beautiful to see, honestly.
Yeah, we're heading for an interesting time. Things, again, people forget, things always change. Nothing stays the same. And I'm young, but I learned this as I'm only 24. It's like you realize just nothing, and I'm sure you can attest to this, you're a little older than me. Nothing stays the same in life. Nothing. No matter what it is, things are always changing, and that's what's going on right now with the current macro world and the money as we know it. It's central banks know it, that the fiat standard they have now, it can't last forever. And I mean, again, I like to use the 7 trillion Fed balance sheet. I mean, we were supposed to unwind this back to pre-global financial financial crisis levels, which was $800,000 or $800 billion balance sheet, and now we're at 7 trillion. I mean, and we went to 7 trillion when we were only at, in August last year, 3.75 trillion. I mean, so we've nearly doubled the balance sheet in less than a year. I'm assuming we're going to easily over double it, by the time this is all said and done. I mean, it wouldn't surprise me the least. And who knows, where are they going to stop? Is it 20 trillion? Is it 30 trillion? I mean,
right.
And, we used to joke about this because, they're like Hong Kong was doing helicopter money, not too long before the U.S. was, 3 months ago?
Right, and then we did it.
And then we did it. I mean, we're doing helicopter money right now. It's, was it $1,200, $1,250 stimulus checks? I mean, that's, and even if you, let's say hypothetically, we only do that for 2 months, dude. So, the people who are receiving those checks, that's what? An extra, if it's $1,250, those people are getting an extra, what is it? It's a ridiculous number. You're getting $2,500, $10,000 there. It took me a while. My math is slow this morning, but, it's an extra $10K, in people's bank accounts that they wouldn't have made, prior. Does it, and that, for a lot of people, that's more than they're making a minimum wage or any wage in the U.S. I mean, it's pretty crazy when you think about it. So if they do this even for, 2 months, the consequences might not be seen right away, but that's a lot of extra money people didn't have in reality. It sounds pretty crazy, and I'm not justifying it by any means. It's inflation. But, people who are only making, let's say, $3,000 a month or $4,000 a month now made an extra $1,000 the last 2 months or whatever, hypothetically. I don't know if people are still receiving stimulus checks, but I've seen some people send me photos of them. So.
Yeah, I'm not sure that they are, but it's. I know it's always on the docket, right? How do you continue if 40 million people are unemployed?
Yeah.
What are you going to do? So it's definitely tough, but it's interesting to talk about and think about how that ends up flowing back into the market. And speaking of flowing back into the market here, there were some reports talking about all the CashApp inflows and purchases that have been made buying Bitcoin. And the same thing goes for the Grayscale Investment Trust. And when you sit back and think about it, call it at $10,000 per Bitcoin, miners were selling about $18 million worth of Bitcoin per day onto the market. And then just a couple of weeks ago during the halving, that number went down to $9 million, right? So they're selling around $9 million worth of Bitcoin per day. And what happens if demand stays the same? And as we've seen from the reports from Square, they reported $306 million worth of Bitcoin revenue for Cash App in the first quarter of 2020. That's a shitload, relatively speaking. And they had essentially no sales just a year or so ago. And it's amazing to see that Bitcoin sales are now reported on a public company's balance sheet as a revenue generator for them. It is kind of amazing to see. And then when you think about Grayscale Investment Trust, and that's the exchange traded fund from Barry Silbert, where you can buy GBTC in your Roth IRA or even just your personal account. It's amazing to see how much Bitcoin is being sold. And as of today, GBTC has taken in 350,000 Bitcoins out of the circulating supply. So every time somebody's, buying GBTC or sending money to Barry Silbert for their Grayscale investment trust fund, they have to then go buy Bitcoin and keep them off the market, right? And pull them back in. And, since 2009, GBTC has consumed another 100,000 BTC, which was 17% of all the Bitcoins mined during that period. So when you think about the available Bitcoin for sale on a daily basis, after the halving, that number just got cut in half. And it looks like that the average investment going into Bitcoin continues to go up. And we saw that with Cash App's change that, or maybe this was GBTC, that the average weekly investment in the first quarter of 2019 was $3.2 million worth, which is pretty much nothing. But now in Q1 2020, that's up to nearly $30 million worth on a weekly basis. So you have this very basic economics of just supply and demand, and the available for supply just continues to go down. And we're going to keep seeing that with every halving. But it looks like the demand is continuing to go up. So when you think about stimulus checks and just money printing and asset prices kind of inflating with that, what do you think about that? With just is money finally starting to flow into Bitcoin on a consistent basis now, as everybody flips from this thing's a scam to, all right, maybe I do need to take a little bit of a position here?
Well, I think it's, again, the free money. It's flowing into everything. We're seeing like excuse me. Not only is it just like crypto and Bitcoin with like the Cash App and stuff like that, you have stocks like with Robinhood. Robinhood's user numbers have went ridiculous, like parabolic in the past, I don't know, 3 to 4 months. As more volatility comes in. So now you think about all the people getting stimulus checks. Again, so let's think let's say hypothetically they get $5,000 this month or whatever last month. That's a free $5,000. Let's say they use the Cash App to buy $2,500 of Bitcoin, and then they use Robinhood to go buy $2,500 worth of Apple stock. That adds up when you think about how many people are receiving stimulus checks.
Yeah. Right, and that's just going to force prices up, right? Because if demand is increasing and the supply is staying the same, we're even talking stocks, Bitcoin doesn't really matter here. And you have more money chasing the same amount of goods in the market, and there are implications to that.
I mean, stocks are even like when you think about stock to flow ratio. Let's talk about stocks. Stocks have like a negative stock to flow ratio because they're taking away supply when they do buybacks. Think about it. All these companies that have spent decades buying back their own shares, reducing the supply, and driving the price up. No one talks about this. It's right there.
No,
there.
It's such a good point to think about because even I want to start thinking about stonks as like tokens, right? And I hope that
they're 100%.
Someday they're not like rehypothecated like they have been. But you make a really good point. And when you're pulling that supply out of the market, it's the same thing as Grayscale Investment Trust. If family offices are like, fuck it, let me buy $100,000 worth of Bitcoin, Barry Silbert. Why don't you hold on to that for me? You are taking that supply,
and it's not $100K. It's like $1 million. It's like just,
right. Yeah. Right.
I'll just toss $1 million over here.
No, it's a good point, but you've removed that right out of the market. You cannot then produce more of it to satisfy the demand, and it's just so different from other things. And I think it's analogous to stocks, because if there's buybacks happening and the stocks price is going up, right? If it's driving that stock price up, an investor can go turn and look and point at a different stock and say, well, this one looks cheap and maybe I'm going to go over there. And they can start to do that. But it is amazing to see how this is just continuing to happen. And I really think we're at the bottom of that parabolic trend of, not a tipping point, but I'd say in the next couple of years, you're going to get closer and closer to that tipping point. And it really feels like we're at the beginning of, so that chart you have on the screen here of the Square Cash App Bitcoin volume continues to grow. Imagine if we zoom out, what does first quarter 2021 look like? What does first quarter 2022 look like? Maybe they're doing $1 billion worth of Bitcoin sales a month at that point.
And think about this.
Or a quarter. I mean,
what if stimulus checks flow throughout this whole year?
Exactly.
Who's to tell us that the Fed and other countries are going to stop flowing free money? And in the interim, again, I like to talk about this. You and I live on a day-to-day basis. It's hard to when you look back in history, it's easy. Oh, that was in 1920 to 23. That wasn't that long of a time frame. But imagine living the hyperinflation of the Weimar Republic. That's over 1,000 days. That's a long time. But we don't think about that when we look back in history. And it's like what's going on right now. We might look back on this in 20 years and be like, oh, that was only a 12-month period of time. Remember when they just kept giving everyone stimulus checks and everyone was buying everything?
Right.
And everything went up. Who knows?
It's hard to recognize as it's happening. It's like if you're like on a diet and you look at yourself in the mirror every day and you can't tell the difference, but somebody who hasn't seen you in 2 or 3 months might say, "Oh, wow, looks like you lost a lot of weight." Blah blah blah. It's the same exact thing. It is so hard to see what is right in front of your face, and I think I'm so excited because more and more people are starting to see literally what's right in front of their face. Like it's becoming glaringly obvious that there's an issue and the money is broken and things won't get better until it's fixed. But the appearance of things getting better will always be there and be pushed down everybody's throats of, nothing to see here. Everything's all fine. We've got everything taken care of. And the next thing you know, my prime caps are costing me $40 a pound instead of $20 a pound. And I'm going to be pretty pissed.
Yeah, no, every time I go to the grocery store, dude, it's like everything's so expensive. Like I don't leave the grocery store without spending easily over $100. Like even when I go light grocery shop, there's no way. It's like everything's expensive as fuck. Like it's like, and I eat a lot of food too, but still, it's just like it's it's pretty soon. I think people will realize the inflation is coming and it's inevitable. Granted, that's needed to hopefully get us to a monetary system that's a little more sound, one would say.
Yeah, I'm starting to take this accelerationist mindset of like, you know what, just print it. Like, let's get it over with.
Let's go.
Yeah. I hate feeling like that, but at the same time, we're delaying the inevitable, and we keep kicking this can down the road, and everyone thinks that they're being helped and that it's working for them, and it's really not. But you don't know that it's not until it's too late. And I don't think it's going to be a hard sell once things start just getting so expensive that people will look for something else, a new alternative. Just sound money in general. The case to be made will really just make itself.
No, it's only a matter of time. If you look throughout history, like hard money always returns. Because inevitably a fiat currency or it just collapses. Because all money is a belief system, and there's a reason why they chose gold, because gold was hard to fake, and it's versus silver, and silver is not as can corrode more. There's a bunch of other things, easier to find, etc. But when you look at it in history, it's like it just repeats itself. And again, in history, it's easy to look at large time frames and be like, oh, that was only a decade. But a decade's a long time, It's like
right. When you're living through it, it's a long time.
It's such a long time, dude. I couldn't imagine living through World War II. Fuck.
Fuck that.
Especially in Europe, 6 years of that. That's a long time. And then when people think it's the end of days, dude, could you imagine living in Germany, from the beginning or before the war through all that?
No, I can't.
And then your whole country just gets split in half, and then you have West Germany, East Germany. No, it's no. What we face nowadays, nothing. As uncertain as things are, it's really not that uncertain. Come on. Okay, they're uncertain, but it's really not as bad as it could be.
Yeah.
Also,
go ahead.
I was gonna say, I always like to zoom back here. There is a monthly candlestick where we go up 450%. So just a heads up, if we do go to new all-time highs, that a 400% candlestick would put us at 80K. It would look pretty retarded. So
yeah,
just some food for thought if it does happen.
Well, it's funny because I think that's a good transition into some of the next topics here. That JP Morgan's now offering to service Bitcoin companies, and they are now serving Coinbase and Gemini as their first clients. And at first, maybe if we were recording this a year ago in middle of the bear market, I I don't know. I'd be like, this is kind of nothing news. Who cares? I was just like so pissed at that time anyway. But I think it's a bigger deal than we think because it's been 11 years now since Bitcoin's existed, and it has been super difficult for anybody operating in this space or entrepreneurs who want to serve the needs of others. They haven't been able to get a banking license, and it's very similar to, let's say, like the cannabis industry, right?
Yeah.
You
Cash.
have a product that you want to offer to people, regardless of the morality of the product, whether it's Bitcoin or gold, weed. It doesn't matter. Your people demand a good or
Devil's
service, and you want to be able to, you want to be able to sell it to them. But when you're being financially repressed, right, you're being ostracized out of the financial system because it's been weaponized. Now you can't do business on the same level playing field that other businesses can. And to see JP Morgan now flip the switch and say, okay, we're going to offer banking and banking services to whether it's Bitcoin exchanges or anybody that operates using Bitcoin and builds on top of it, I think it will allow for more entrepreneurs to take that as a good sign to say, okay, I was fearful of starting this business because I didn't think I'd be able to get a bank account to operate, and now all of a sudden you can. And I think that's it's really a big deal. If you and I wanted to start a business right now and do something with Bitcoin, a year and a half ago, we would have had to sit and think really carefully how we were going to do that. What were we going to do? Go to Silicon Valley Bank or Silvergate and like beg them to bank us so we could have a business? You know what I mean? It's like, It sounds crazy at first. And the thinking about it that way, you'd say, oh, well, you're a Bitcoin company, just use Bitcoin. You don't need banking services. The problem is you're still in this transitionary period where you can't get away from using the dollar or whatever other fiat currency is in your local economy. Like you're going to end up having to use it at some point, whether it is to pay bills, your overhead costs or whatever. You still need that on and off ramp to the legacy system. So when you sit back and think about that, do you think the financial plumbing is finally now being built so that just a whole new industry can start to emerge from this?
Yeah. Again, it's one of those things that takes time, and it is happening again. We see all the people that berated Bitcoin prior to 2017 and even into 2018 are all now some form or another exposing themselves to it, whether they're using it again, giving services to banks. Like, why wouldn't you to Coinbase and Gemini? Who knows? Like, you get another crypto bull run, and those things will be cash cows. You know what I mean?
Right.
And so it'll be interesting to see if JP Morgan. What about what other big exchanges in the U.S. You get Kraken. There's probably a few others I'm not thinking of, and if you know them.
I'm not sure who Kraken ends up using. They might use Silvergate or Silicon Valley Bank if I had to guess, although I'm not 100% certain. But I'm thinking of some of those other new services like Swan Bitcoin, where they offer like dollar cost averaging. If you want to just buy $50 worth of Bitcoin, you can sign up with Swan and set up your ACH, and it'll just do it for you automatically. But I wonder how difficult it was for them to get a bank to actually work with them. But when I sit and think about that kind of stuff, that's just such a good idea. You just want to offer a very simple service that has to do with Bitcoin, whether it's getting it in people's hands or pockets or cell phones or using it as a savings technology or however you want to spin your Bitcoin product. Now that you can get a bank account a lot more easily, I think is just big in general. And, we talked about this last episode and I wanted to ask you about it. Do you think if now that JP Morgan's kind of offering this and more entrepreneurs and other people are financially vested in Bitcoin revenues now, right? So if JP Morgan's going to make a shitload because they're allowing Coinbase and Gemini to bank with them, now when you think about the quote unquote a Bitcoin ban in the USA, do you think now you're going to have more pushback against that if it were to happen just because there's too much money to be made?
Yeah, again, I think the U.S. is pretty. We're one of the more free countries in the world. I know there's some pretty free places, but when you think about it, I think again the business side, and it'd be dumb from a country standpoint to not embrace the future. It's like
Right.
the U.S. by far, we led the internet revolution. Like, it's not even close. Like, look at the dot-com bubble. It doesn't even compare. Just look at the fucking NASDAQ. Like, it was the internet companies were here in the U.S. That was just the reality. We led that, and that again helped the U.S. prosper in many ways because we had all the the technology and what became the basis of the internet. Again, here with what whether we're going to call it the internet of money, whether we're going to Bitcoin, whether we're going to call it crypto, this is a huge opportunity for any country around the world if they embrace the technology and use it to their
Right.
advantage. I get it. It's that Bitcoin is a scary reality for any country's fiat currency, whether it's the U.S. dollar, the British pound, the Chinese yuan, the Japanese yen, you name it. It's a scary reality. It's because it's a permissionless money that you can send anywhere and transfer over any border. It makes the Fed powerless, and that's where we talked about before. If you want to send money from point A to point B, like if I want to send money from, let's say, Mexico to Peru, odds are the international transfer is going to make its way to the New York Fed. Same thing if I want to do Brazil to India. It doesn't matter. It goes.
Right.
The majority of international transfers go to the New York Fed. If the New York Fed wants to block you, they can. And so and I'm not saying like whatever if it's a bad person transferring, but again, the New York Fed shouldn't choose whose money goes and whose doesn't. Again, the
That's
dollar
right.
is a financial weapon. That's all it is.
No, yeah, I think you really nailed it there. And it can be so frightening to governments and central banks to say, well, we could really lose our monopoly over the production of money. That's the real issue, right? You can lose that monopoly over the production of money. It's super scary. But I think to counter that, you made a great point, is that the countries to embrace this quickly and first will be so much better off in the long run. And I think their citizens you can almost use that to say, look what we did for you guys. We brought all this prosperity because we didn't use the long dick of the law to limit Bitcoin's spread or the industry in general from not being able to prosper. And I think it's kind of analogous to when China and India remained on the silver standard and everybody else moved to gold, and their economies just got wrecked. And they were so much further behind the curve. It's like if you're choosing to use the worse money compared to a better money, you can see those implications kind of inflict that local economy in a detrimental way. And now you have countries like China and Russia now, they've been buying a shitload of gold. And you even have Venezuela try to get its gold back from the UK. And the UK told them to go fuck themselves. Like you're starting to learn, it really is all about that. Who has the hardest money? And I just would love to see smaller countries or countries that have, that are called like third world today, just say fuck it and go long just innovation and technology, and you'll be able to leapfrog yourself back into reality. It's like there's no telephone poles in some of these third world countries because they just leapfrog to cell phones. It's like you miss that whole infrastructure phase of like landlines. Who gives a shit now? Who needs a landline?
No.
Like you can use the public blockchain infrastructure and just build from there. And I think it's going to be awesome to see. And I think that the smartest governments will embrace it because you're going to make your citizens so much more wealthy in the long run, and you're going to get so much business coming to you that it's almost like the incentives will align as such where you might as well not fight it. You just need to embrace it and you need to lean into that. And I hope that the U.S. heads in that direction because I don't want to leave. Like I want to stay. It's a great fucking place for right now, honestly.
Yeah.
And I would hate for us to miss that because it's just going to make things so much better. Can you imagine going back to sound money? I mean, fuck it. We're going to see sound money again in our lifetime.
No,
and it's going to be
inevitable. It
awesome.
might take a while, but it's inevitable for us. We're young enough. And you think about the older generations, like people my grandparents' age, people in their 80s, they had sound money for most of their lives. Like most of them, people I know are like they were born right after the U.S. Was Executive Order 6032 or
6102.
6102 banning private ownership of gold, pretty much. So there you go. Like most of those people, they lived during gold standard time, though. For 40 years of their life, roughly, they couldn't buy, or even more than that, almost 40 years, owning gold was illegal for them, so it's pretty interesting to see that play out. And then obviously they, the rest of their lives has been under a fiat standard. And I always wonder, it's like, how do these people, I get it, it's over a long period of time, but it's like, the pricing of homes is just drastically different than it was in the 70s and 80s. The same with cars, the same with everything. You don't, when you always like to bring up that McDonald's menus from the 70s. It's not even close. Like a 15, cent, or is it 15 cents for a quarter pounder or
yeah,
for a
something
burger?
ridiculous. Yeah.
No, it's not even close. It's it's 10x the price now. You know what I mean? So it's like,
yeah, at the least, yeah.
And that's like a minimum. I'm being conservative with that, but
right.
It's the insanity of the time we live in, and nobody even thinks about it. And you and I both know people's wages have not 10x since like 1975 or whatever that picture was taken. They have not, because if that was the case, everyone would be making, what, $150K a year, or something like that. At least.
Yeah, at least, yeah.
Yeah. So, and again, all this fiat money, what it does is just transfers money upwards. It's literally, and I have nothing.
I
have nothing against people making money. If you make money, good for you. But my point is like, you watch like the top, was it 0.01% get stupid wealthy each time this happens. That's what the Fed saves when they print money.
Right, right. Like, when you have to reinflate the asset that is causing so much wealth. If you're worth $10 million or $25 million because you're sitting on all this commercial real estate that you bought in the last 20 years and you've been playing that game, but the Fed didn't allow all of the debt to get wiped out in '08, and then they're doing it again this time around. And you're like, please, bail me out. I'm worth $25 million. I don't want to be worth $1 million after all these overvalued assets kind of go poof. You keep pushing all of that wealth upwards, and you're stealing from the people who don't realize they're being stolen from. And you write them a $1,200 check and they try to forget about it. It's like, you don't realize that every time you debase the currency that way, the weakest people that you claim to be helping are the ones who really get fucked. And they think you're helping them by sending them a $1,200 check, and they don't realize that's the cause of the problem.
Yeah, I was gonna say, like, and again, like 50% of Americans could give two shits about the stock market, and it's probably even more than that. Like, a lot of people, like, if equities lost 90% of their value, most Americans could care less. Now, granted,
they wouldn't know, right?
They would, well, and I say granted because a lot of people have pensions and stuff like that, so it would affect a lot of people. I'm not saying that'd be a good thing, but that's the reality we face today. Equity markets can't go down, and if they do, everything is fucked. That is where the Fed, that is where the ECB, that is where the Bank of Japan, that is where all these central banks are at. They know they cannot let equity prices fall. Because if they do, it's all over. And
right.
It's a sad reality we live in, but and I try to explain it to people, and people don't understand. Like, if tomorrow the Dow Jones was 10,000 points, we would have major issues across all of the U.S. Like, there's just, everyone who thought they had a retirement would not have a retirement.
Right. It would be a complete shit show, and I think that's a good transition into the last topic from Goldman Sachs on inflation, gold, and Bitcoin. Because as we're talking about saving asset prices, bailouts, keeping stonks inflated, keeping commercial real estate inflated, keeping residential real estate inflated, all of these asset bubbles that have been blown up by the Fed. Now you see Goldman Sachs come out with a report, and they were not a report, but they're sending out invitations to their clients to discuss the implications of current policies for inflation, gold, and Bitcoin. And it's, just as we said with the JP Morgan news, it's like, they didn't care for the longest time, and now all of a sudden you have Paul Tudor Jones talking about inflation. You've got Raoul Pal talking about inflation. You've got every Bitcoiner on the planet talking about inflation. You've got the memes of people who work at the Fed talking about there is unlimited money. We can print unlimited amounts of cash, and nobody has to worry about a thing. Well, we've got everything taken care of, and now it's finally starting to show itself, right? And you have on the screen here a tweet from Macroscope, and I thought this kind of nails it. He says, does anybody think Goldman is going to be negative on BTC on this call? The fact that BTC is included tells you that you're seeing substantial client interest. And I think that's a really good that's a really important point, because why would you even include Bitcoin in the conversation talking about the implications of inflation? You could just leave it at gold and drop it, right? You didn't have to include Bitcoin in this, and nobody would think anything of it. But I think that the fact that they did include it is an indication that maybe some of their clients are asking about Bitcoin. And, well, what do you think? I've read all these reports and seen this thing from Van Eck that if I had 1% of my net worth or my portfolio in a 60-40 bond split, I would have made an additional 15% return annually over the last couple of years. Or if I would have had 2% on a 60-40 split, it would have been even more. What about a 5% split? Or what about holding 95% cash and 5% Bitcoin would have done just as well as 100% allocation to the S&P 500? People are starting to ask those questions to their financial advisors, and your typical financial advisor just ignores the whole Bitcoin conversation. One, because they're Keynesian trained. They don't know dick about money, monetary history, inflation, or anything like that. So they're completely out of their element talking about it. And two, they didn't have any products to sell you to make money. So why would they encourage it? Like, they can't make money selling you Bitcoin stuff, so they're just not going to talk about it. But now you're seeing that start to turn. So do you think that Goldman is starting to see some interest from their clients, and that's why they included it?
Yeah, and I would also like to say people are not only viewing, obviously there's interest there in Bitcoin, there's clients, but on top of that, that is just viewed as a hedge because, current policies for inflation, gold, and Bitcoin. So it is viewed as a hedge against inflation, along with, as gold is traditionally viewed as a hedge against inflation, Bitcoin is now included in that conversation. And honestly, that's probably one of the biggest, that will become one of the biggest narratives, I think, in this next bull run is inflation. And everyone's going to want a little Bitcoin, and, whatever, a little gold, a little silver, who knows. But that is a huge step forward, again, in people's mindset. And I think the inflation term, like there's that famous whatever, is inflation dead? Is that from March 2018 or whatever? You know what I'm talking about? That it's an article cover from one of those typical magazines that always marks the top or bottom.
Oh, right. Like, is inflation never happening or something like that? I think I remember what you're talking
It's
about.
with the dinosaur on it. Yeah, Bloomberg. Here it is.
Right. Is inflation dead? Yeah, no fucking way it's dead.
Yeah. Okay, so this is from April 22nd, 2019. No, it's not. And, we're going to look back at that in history and be like, that was such a joke.
Yeah. You know what? When you said that, talking about it as a hedge, I guess I didn't really think about it in those terms. Obviously, inflation, gold, Bitcoin, it makes sense. But that's a really good point. I wonder if the hedge narrative will really be a driver in this next bull run, because in 2017, it really wasn't part of the narrative at all. I mean, I guess if you were really interested, okay, Bitcoin fixed supply, it's not easily inflated, blah, blah, blah. Okay, that's all sounding good. But now that you have inflation as a huge talking point for everybody now, everybody's talking about it. Is inflation coming? Is it deflation or inflation? Will we see consumer price inflation? Because that's what everybody's actually worried about. The hedge narrative might really be the driver in an event where money printing continues to try to prop up asset prices and people are looking for an escape hatch. And I think I think you're right. It could be a huge narrative this time around, whereas it was not a narrative in 2017. It really wasn't.
I wasn't talking about inflation during that bull run. Nobody was talking about inflation. I still wasn't, I still hadn't read on history of money, until after we had peaked. That would have been like April of 2018. So so no, it definitely now is a narrative. And even here, I pulled up this from a blog, probably Precious Metal blog, but it basically says, where Bloomberg always, this Business Week, is inflation dead? That's from 4/20/2019. Like that, we're going to look back on that, and that's going to mark, that where we're going to look back in 6-7 years, and be like, oh, that marked where everything started to inflate ridiculously.
Right.
And oh, go ahead.
No, please keep going.
Oh, I was going to say, the Business Week, the other one, it's death of equities. That's from August 13th, 1979. If you bought equities in 1979, you fucking crushed it.
Right.
For the last 40 years, And then on the flip side, they're talking about in the death of gold back on December 13th, 1997. The subtitle read, "Gold has fallen from grace and is now a mere metal and a bad investment." It was around $285 per ounce. at the time, and then that would have been, basically a 10x pretty much, in the decade coming, with gold, because it went up to 1900. Not really a 10x, 9, but that's good enough.
Yeah.
So just, it's always fun to look at these publications and, see how they mark tops or bottoms or certain beginnings or endings to things.
No, it's a good point. And I love that we have like the podcast now and we get to talk about this stuff every week, because I think it holds us accountable too, because we do get to talk about it every week and you can hear our topics and commentary. It's like our own narrative that we're seeing play
Morphing.
out each and every week, and it morphs. Yeah. And it'll be interesting because we can look back and talk about it. It's like, on episode 93, we talked about inflation again for the 100th time. And
on episode 8, the world was ending because Steve Mnuchin was having called bankers, and then it didn't end. And then we rallied for a whole year.
It's unbelievable how all of that can just happen, and you can keep kicking the can down the road, and how the narrative has really shifted. Oh, yeah. And dude, I think you're right. I really hope the whole hedge narrative plays out, and regardless if equities tank or keep mooning or there's no depression, recession, whatever, it's like
you tell me, man. Look at these charts. They're getting retarded again. Amazon's just going places. Amazon doesn't care. I don't think Apple or Facebook cares anymore. I mean, Facebook's at all-time highs. Like, what the I just unplugged my headphones, so I can't hear you for 1 second. But, anyways, I'm back. I just hit my fucking record.
It is insane, and you look at, there's a complete disconnect from reality with equity markets and just inflation, money printing, earnings. Like, stonks are still trying to head towards all-time highs, and yet 40 million people are unemployed in just the U.S.
Yeah.
It feels like things are mispriced, but then again, I'm always wrong. So, are they mispriced? Like, I don't even know. But
is this just the beginning? Like, that's what I always ask myself. Is this just the beginning of the NASDAQ run? Like, what the fuck?
Right. No, it's a good point, and it goes to show that you can manipulate the money supply to do, and other things end up happening as a result of that manipulation, and you can't plan for it, you can't predict it, you can assume that it's going to happen, but if you would have asked us, I don't know, 2 months ago, we would have said, yeah, everything's finally on its way to zero, to flush itself back out, and yet here we are again, making moves, and it's just mind-blowing. It's mind-blowing, but then I find so much safety and security in the fact that there's a resurgence in just the demand for sound money again, and so many more people are talking about it this time around. Like, the internet's now prolific in
fiat,
the finance world, right? So, like, nobody could talk about it in 2008 because there was nobody to talk to. Who was Michael J. Berry gonna fucking talk to about this? Like, screaming his head off, like, "Hey, something's going on here. The housing market's about to crash. The whole thing's a joke." The numbers just aren't adding up, and nobody would listen to him. But he also didn't have a medium to communicate that to anybody at all. And it's fun to watch him now start to communicate that again, that same message. And now he actually has people to talk to, and people are listening, and people agree with him now. Mm-hmm. So I think that's what makes, I guess, this time is different, because now people are shit posting and making memes about, recessions, depressions, financial collapse, all this stuff. More people can kind of see the writing on the wall this time around. So I do think, in that sense, it is a bit different.
Yeah, it's definitely, the information spreads much quicker because we're all on smartphones. But again, it's like, how long can this go on? How long can things keep going up? And it's like I mentioned a little bit ago, it's like, well, hypothetically, if you're getting $1,250 per stimulus check, so that's an extra $5,000. If we do that for, like, even for just per month, that's extra $5,000 per month. If we do that for 5 months, it's $25,000 for people, and that's a lot of money. To some people, that's like, holy shit, I can go buy a bunch of things.
Right.
And so it'll be interesting to see how this pans out. And inflation might not, really seeing inflation might take a year or two to play out. So in the interim, there's going to be all this free money awash, and people are going to go out and do things. Especially, I think, as this coronavirus narrative, the whole lockdown just keeps getting weaker and weaker every day, especially in the states that still have it. Because everyone has social media now, and everyone can see, not everyone has social media, but everyone can see because of the internet. Oh, over in Florida or in Georgia or Texas, these people are all outside, no one's dying, and people are like,
right.
why are we still locked up? And I think the want of people to go out and the free stimulus money might push things a lot farther than people think, especially after Memorial Day weekend. I think, in terms for equity markets, that's pretty bullish, especially, with more small businesses being open, people going out, economies restarting. And I think the U.S. here, I'm not a staunch Trump supporter. I like something he does. I don't like other things. But I think the U.S. here might be, and again, social media, everyone can see if the U.S. reopens and no one's fucking dying, a lot of the West will begin to open. There's just no way around it. People are like, why are people in the U.S. going out and doing things? And people in the U.K. are like, why the fuck are we still inside? Why are we sitting in these circles?
Right.
It's time.
It is time. Yeah, this was one of my favorite episodes. This was a lot of fun to kick around. I think a lot's happening. Just as we said last episode, it's like summer's getting ready to start. You can feel the air is electric, right? It's finally changing. People can't wait to see how everything's starting to play out. It's awesome to see so much demand for Bitcoin in the last couple of quarters, and I really hope it continues on, not only for my bag so I can become insanely rich, but because I do, as selfish as that sounds,
Everyone wants to be rich to some extent, and it's more of a freedom thing than anything.
And you nailed it. That it's really just about that freedom.
That's all money is. It's your economic, was it time container or whatever? What's the best way to put it?
Well, I like thinking about it's like the old saying, time is money, but then money is also time. So if you have enough money, you can buy yourself a lot of time. And I think this kind of lockdown has showed everybody that they kind of want a lot of that time back. Some people have really surprisingly enjoyed the lockdowns, whether that's spending more time at home, being with your family, working from home, just a whole change in what that looks like. And it's not necessarily a bad thing, apart from the side that people aren't getting to go outside and do the things that they want. But, people want to have that financial security. And I can't think of a better way to have financial security than to have access to good money. And I love that that's becoming a narrative. And it is exciting.
Dude, tell me the narrative. Tell me why NASDAQ doesn't go 10,000 now. I don't see, like, when I look at this chart and I forget everything that just happened for the last 2 months. I look at the NASDAQ chart and the only thing I can see is 10,000.
Right.
I mean, I don't see any other way we go about this. Like, it's going. And I think also just because a lot of people are now just so bullish on reopen again, I've heard, I occasionally watch CNBC and Bloomberg, not as much lately, especially because I just stopped watching TV completely for the past probably like month and a half. But like, whenever I turn it on, like, the people think we're going to be wearing masks forever and we're never going to go outside, and that, we're never going to go out to a restaurant or, go out to a bar or, go out to some club at night or, do any activities. It's like, I've been outside, I've been walking around, and I see people doing a lot of activities. I'm calling bullshit all these people on TV. For the most part, not everyone on TV, but there's a good amount of times when I hear people on like Bloomberg and they're like, oh, these people are never going to go out. And I think because a lot of them aren't Americans, Bloomberg has more European hosts and, Asia hosts. But I think, again, the media is so off on this. They're so far off. They can't even see the writing on the wall that people are outside and they want to do things again.
Yeah. Yeah. People want to be free.
I think betting against that, I think people who think that we'll never go out and do anything again or go to like a ballpark. I don't like baseball, but go to a ball game or go to some sporting event, whether that be tennis or go to the Masters for golf or just other things like that. Big sporting events. I think it's pretty tough to say that really is going to change. Like, and I like to say, like, 50 million people died from the Spanish flu, and guess what? Like, look at the 1920s. People fucking did a lot of things, and that's when, like, obviously the Roaring 20s. Baseball became bigger things, sports. So I think it's hard to say that people are going to really, because we're social beings. That's, at the end of the day, it's real.
Right.
So,
no, I think those are good points. That's a great way to finish it for sure. Yeah, this was episode 93 of the Beef and Bitcoin podcast. Like and subscribe on YouTube. Leave us a comment. Write us a review on Apple Podcasts. That definitely helps us move up the ranks, so we do appreciate that. And yeah, shoot us a DM. We appreciate all the topics you guys send us. Makes it way easier for us to put on the show for you guys. So yeah, stay safe out there. Get outside. Get some vitamin D. Stack sats. Fucking think about what you're doing and enjoy it. Summer's coming.
Enjoy life. Yes. 7 trillion, baby. Here we go.
Peace.